Hello, welcome back to Forex SPV. So in today's video, I am going to take you through a real-time simulation of how we trade high-impact news events, specifically the non-farm payroll release that happened on Thursday, July 3rd, 2025. So our case study here we have is gold. So gold against US dollar, which is also a high volatile pair during news events, especially when the USD is in play. So before we get into the actual price action, let's break down the context that leading to this news release. We have seen the dollar showing mixed signals. So we had the dollar selling on the previous day. So, but fundamentally, we were expecting on this day to have strong NFP data based on the market sentiment and the recent testimonies from Powell and other Fed officials. So this is the 15 minutes time frame. And here is where the market closed and we had a market open into the new day. Okay, let me change the time zone real quick here first to match with our time zone. Okay, so the market had already closed during this time and we had the market open into a new day. So you can see the market started by buying. So the market started by buying. And if you look on this previous day, it started at with this point and we have another period separator here. So when we draw the highs and lows, so this will be the yesterday's high. And this here would be yesterday's low. Okay, so we have price breaking yesterday's high immediately after Asian open. So let us simulate and see how the Asian market played out. So you can see the Asian market started with sales. You can see the market was selling hard, so forming the Asian high, and now we are rejecting price at this order block here. So this probably might be the Asian low. And you can see price now is going up. So on this day, gold started its top and low during this time. And this here was the first swipe. It was hard to observe it as it was happening because it was during the Asian session. And this here is the second swipe. And you can see the third swipe had like 3 vector candles with very good rejections targeting yesterday's high. So this here was the last top and high. And you can see around this around this yesterday's high, you can see price formed code of wood. So this is code of wood and price started selling. So after this top band, we had a pattern here and price started selling. So if you are looking to sell gold, this here was an opportunity for you to take an entry to sell for this day. And as the market continued, we had a retracement coming to this order block. And then we had our second move going down. So you can see this here is the second intraday level for the day. So we had the first, the second. So you can see it almost completes this false move. So we are almost completing the false move. And now we're just near the NFP. So we're just near the NFP time. And we usually observe the 5 minutes time frame just prior to the news release. So just prior to news release, you need to be observing the 5 minutes chart or even the 15 minutes chart, but the 5 minutes chart will give you the real momentum that you can see. Okay, so you can see price has been developing as a retracement, and right now we are close to the NFP. Let us now observe the 15 minutes first. So there was something created here in the 15 minutes time frame. You can clearly see this here was the low. Okay, so this here was the low for the Asian session, and price came all the way to this low. So if you look at this, someone can look at this as a W, but right here you can also see it's showing like it's going for the third intraday, but you can see after this candle the momentum has slowed down. So you can see here price is rejecting this zone here. Price is rejecting this zone, and now we're at the last two candles before the news release. So this is the 1500 candles. Now you can see price is rejecting this zone here. So this Asian low. So this here basically would mean that price is creating an area of support, and we expect for people to put the sell stops below here, but also we expect if someone is buying here, if someone would see this as an opportunity to buy, then their stop losses will be below this low. So this here is a liquidity trap that the dealer is creating prior to the news release. So let's go to the 5 minutes chart and observe. So you can see, look at this behavior. Look at this behavior. We are approaching news release. So before the news release, if your anticipation is to sell, usually the dealer would give you false move like this. You can see clearly on this 5 minutes chart, on this area of support, price formed this W and started buying. Real big, So around this point is 1520. So the next candle is 1525, and the next will be the NFP candle. So as you observe on the 5 minutes chart, you can clearly see the momentum of price going up. But you know best that we have formed a pattern here right after this top hunt. We are at the third intraday level. Actually, we have not broken the second intraday level. So this swing low here, we have not broken it. And this is just a false move prior to the news release. So we keep observing, and so right at this candle here, we were preparing ourselves to take our sell trade here. So our anticipation when we did our analysis on the dollar index was that the dollar could be strong. And all these factors are also telling me that the dollar will be strong, like gold will sell, because this here is clearly a false move prior to the news release. So roughly 3 to 4 minutes before the release, based on this structural setup, the candle behavior, and our anticipation of strong dollar, we enter our trade on gold. So you need to enter your trade before the news release, okay? So you need to sell gold right here. Put a stop loss just above this high, because if the news release is against you, so if the data comes out and the volatility goes against you, then we need a tight stop loss to cover for the loss. So usually news release, when you trade the news, you would have a very tight stop loss. So you need to put a sell maybe around this, and we can have an open take profit. So we are risking $2,000. So that's 4% of the account. And we now, okay, let's put now our TP. So let us put our TP around that area, and we can place the trade now. So we have our trade right there. So just before the news release, so let me put the stop loss around this point. You can see the TP is right here. So we are risking that much, we are looking to gain that much. Now it is time for the news release. We have our trade in place, and boom, here comes the news release. A good sell as expected, so price went all the way to touch yesterday's low. You can see the second candle now, still selling. So we had a very good sell, and we are reaching our TP very fast. So you can see how fast this move was. So if you go to the, so you can see our TP has already been hit. So if you go to the 15 minutes time frame, you would observe a very good candle going down. So right after breaking this low, this support, we know that the dealer had grabbed liquidity at this point, and the dealers also grabbed liquidity below these levels. So we are now going to fill the imbalance that is available because of the news release. So this is how we train our traders at Forex SPV to approach news events, not without fear, but with strategy. While many wait for the numbers, we react to price. We react to the volatility that comes with the news release. And while others guess, we usually read what the market is telling us. We read the dealer's intentions, and we take our trade. Remember, this approach is different, and it's also different from those who are trading purely dealing with fundamental analysis, looking at the macroeconomic events, as those would look at the long-term fundamental effect and take a trade based on that. But with us, we are only trading the volatility. So we are here to try to ride the volatility spike, and that's how we do it. Thank you for listening. Don't forget to like and subscribe our channel for more videos like this.